Okay, well, we might get started. Welcome, everybody, to this Ask an Expert event. For those of you who don't know me, my name's Alison Airy. I'm the CEO of ACBC New South Wales. We're really delighted to be doing this event today. One of the strengths of ACBC is our members and the expertise that they hold in their heads. Unfortunately, with the pandemic, we haven't had the opportunity to just meet and have those informal conversations where you get to download people's brains, but that's what we're hoping to do today, to give you the opportunity to ask an expert your questions about the China market. A few points about today. We'll get our experts to give their top tips for the market based on their experience with clients and contacts. And then we're going to go out into two separate breakout rooms from about 12:25, 12:30. The second breakout room will start at 12:45, so we will transfer you from one breakout room to another. There's nothing that you need to do, but there will be a little bit of a lag as you move between those two breakout rooms. I do have one request. If people have logged on, if you could change your name via the Zoom settings, that will allow us to see who you are. Some people are coming up as iPhone, which makes it difficult for us to allocate you to the right room. So anyway, I'm going to introduce our four experts representing the fields of marketing, accounting and market access, law and shipping, and they're going to give their top tips before we head out into our breakout rooms. So I'd like to start with Gerard Robb, who's the CEO of Sinaprise. Gerard will talk a bit about Sinaprise, but he has a very varied background. He has done things like manage a successful health and fitness business in Tokyo, worked in the financial services sector, in integrated resorts, and his most recent role before taking up his current role was in a Chinafication project for the Star. So Gerard, over to you to give us your top tips.
Thank you, Alison. Always a pleasure to be involved with the ACBC New South Wales, and thank you for the opportunity. I'll keep this succinct in the interest of time, and really what we'll elaborate a lot more in the breakout room. But I think there's some real key fundamentals if looking at businesses who are wanting to deal with China in a e-commerce respect. I think there's some real points or questions you need to ask yourself before you run down a rabbit hole or invest quite a bit of money. So I think what I'll do is just check off my tips in regards to, firstly, how do you approach, from a baseline level, how do you approach this market in an e-commerce way? So number one, there's four questions really that we speak when clients come to me. I literally have a screening process just to make sure that we don't waste people's time or money, and ensure that they have the right mindset and actually have the right product. So there's four questions that really need to be answered right from the get-go. So firstly, your product, is there demand for it in China? So is it like a famous type product that has a brand name, or even just as the commodity, meaning a type of product, there's a demand for that? So to really, if there's not, there's going to be a lot of money that needs to be invested. So I mean, an example would be, for example, certain brands of milk powder, and there's 16 million births a year in China as we speak at the moment. So obviously there's a demand for that, and we all understand the nature of the demand, the reason why there's demand for those products in Australia: safety, clean, green type of product that people can trust. So there's an example that, okay, if you've got that product, you've ticked that first box. Number two, do you have the ability to scale up? So for example, you might have a great product, but then we hit the e-commerce market in China, and your shelves are cleared within a week. So that's fine if you have a limited amount, but you need to have a think about, do you have the ability to scale up or scale up and down in regards to certain periods for the China market. So that's number two. Number three, just another basic fundamental, is it easy to ship this product? Are there any issues in regards to getting it through customs? Is it, at the worst, is it contraband, or are there reasons why China are not going to allow that product into the country? So we need to tick that box. Number four, does the product have a high value or volume? And this is a little bit more around profitability and whether it's actually worth you investing in this market. So high volume, obviously, you're going to make that margin there over a period of time, versus it could be a really unique product that you can't get anywhere else in the world, or there's a certain tangible value to it from Australia. In that case as well, it's viable. So those four questions, I think, are key fundamentals to before you really go any further. Secondly, we're looking at being very, very clear on actually what your model is. Everyone talks about e-commerce, but there's a lot of mechanics that go behind that. So really, this is a cross-border mechanism. So we really need to be looking at, okay, how are we visible? How are we going to receive payment? And then how do we manage logistics? So being cross-border, there's just different mechanics around that, which we can actually go into in the breakout room. But again, those three questions are hypercritical before you go much further. So visibility, what platform are you going to be on? Payment, where's the payment going to, or what payment system is going to be used to receive your funds? And then most critically, you can do those first two very well, but then logistically, if the consumer can't get that product in a timely manner, then, well, you've got big problems, or actually don't really have an end-to-end solution. So what I will do, I think, is I'll leave it at that, but they're my key tips, just that if you're looking to focus on the China market, and they're really, really critical that you answer those questions first and foremost before you go any further. So thank you for this opportunity once again, Alison, and we'll speak in the breakout room.
Okay, thank you. Thank you, Jared, and thank you for trying to stuff so much into the five-minute period, which I realise is quite unfair, but more time for discussion in the breakout room. We'll hand over now to our team from SW, who people may know better as Shinewing Australia, as they used to be known. We have Danny Armstrong, who heads SW in Australia as Managing Director. He's got a 35-year career in the financial services sector with a focus on advising firms about Asian markets and, among other things, he set up the NAB branch in mainland China. And from China, Danny's colleague, Toby Graham, who also serves as a non-executive director on the board of Auscham. So Danny and Toby, I'll hand the floor over to you, and I believe there might be some slides. Fantastic.
Thanks, Alison. I'll kick off first. So thank you again for the opportunity to present today to ACBC members. So my first tip, which may sound obvious, is get the right advice from people with experience in the market. China's obviously a different operating market to Australia, different legal system, different regulatory requirements. There's plenty of people with experience operating in the market, and generally they're happy to help you out. So get the right advice. Secondly, and this one may sound a little obvious, but we see mistakes made, protect your IP. Protect your trademarks, your logo, your brand. Make sure you've got all your registrations in place up front. Sadly, we've seen lots of our clients who have had the unfortunate experience of either individuals or companies in China so-called camping on their brand. And while you can have legal redress to sort that out, it obviously takes time and costs money. So always best to put all your appropriate registrations in place up front. Thirdly, unlike Australia, China has a closed capital account. So what that means is that capital cannot flow freely across China's border, either out of China or into China. It requires the approval of China's foreign exchange regulator, known as the State Administration of Foreign Exchange, or SAFE. So it's really important when you're establishing a business in China to think about your capital structure and to make sure that you've got enough capital that you can utilise to establish your business, get it operational, overcome any hiccups there might be along the way. Because if you need to access additional capital, there's a process to go through before you can remit more money into China. And if you need to borrow money from a bank, that's a bit more difficult in China than it is in Australia. Fourth, think about how you structure your international trade. For example, if you're an exporter sending a product to China, think about how you structure your trade to give yourself the optimal chance of being paid. While many Aussie exporters naturally would like to do things in Aussie dollars because then they have no foreign exchange risk, it's always easier for a Chinese company to pay you in their local currency, the renminbi. And major global banks, and indeed the Australian banks, can help you hedge foreign currency risk on the renminbi, just the same as they can with any global currency, like US dollars or British pounds or euro. They can help you hedge renminbi. So think about the currency. It might be to your advantage to actually structure things in China's currency rather than Aussie dollars. Contingency plan. I've had a bit of experience. I used to run the NAB in China, as Alison mentioned. I've had a bit of experience with some of our biggest resource and food exporters. And generally, they structure their trade so as to give themselves three different ways of being paid. First, the primary obligation, of course, sits with the counterparty they're exporting to, the importer on the Chinese side. But secondly, they've generally got a letter of credit or a payment guarantee, if you like, in place from one of the major Chinese banks. Why the major Chinese banks? Because they're globally recognised, well-rated and well-regarded by the Australian banks. So what this means is that if the importer doesn't pay, then the Chinese bank must pay as long as the documentation is correct. Thirdly, they often put an additional payment surety over the top of that from one of their local banks. So it might be one of the Australian major banks, for example, which means that if the importer doesn't pay and the Chinese bank doesn't pay, if the documentation is correct, the Aussie bank must pay. And you may think, oh, well, that sounds pretty convoluted and sounds pretty expensive and difficult. It's actually relatively inexpensive and not that difficult to establish. So I encourage you to have a talk to your bank, have a talk to your advisor and seek their guidance. And an unashamed plug, if they can't help you, please come and talk to us and we'll try and help you out. Lastly, if you're establishing a business in China, think about how you structure your business from day one. Of course, when we set up a business, whether that be hiring employees into our business in China or going into business with a joint venture partner, things are always good at the start. But it's wise to contingency plan in case something goes wrong down the track. The way you operate a business in China is different to Australia. There's a couple of really important mechanisms called the company chop and the financial chop that enable you to contract in China and operate your bank account. And foreign companies operating in China have to appoint a local legal representative, who's generally the person who has control of those important tools and is the person who's recognised at law to operate the company. So contingency plan to make sure that if something goes wrong in your relationship in China, that you've got the appropriate legal redress and mechanisms to keep operating your business and in need to get rid of the person who you're in business with. I'll stop there. Thank you.
Thank you, Danny. Now over to you, Toby.
Thanks, Alison and Danny. Look, I'll jump straight in. In my top tips today, I want to talk briefly about setting up a company in China and performing background checks. So obviously touching on China's new foreign investment laws and with the company setup, I'm happy to chat about some of the more technical aspects of the setup process in the breakout rooms afterwards. But I think if there was one takeaway that I'd like you all to have today, it's that setting up a company in China, I think, is getting easier and heading more so in that direction than otherwise. So certainly, compared to a few years ago, there's more market access, there's less red tape, faster application and processing times, smoother controls on aspects such as profit repatriation and the like. And I can tell you this as somebody who works with foreign investors on company setup all the time. These aspects have improved significantly. And I say this because, at the end of the day, the benefits of engaging on the ground in China are obviously greater than trying to do so from abroad. So probably the most significant reform that's changed the landscape is for foreign investors over the last couple of years has been the China's new foreign investment law, which I'm sure has been covered before by ACBC. But basically, the law removed previous laws governing various types of different legal entities. And now all new companies in China are set up as a limited liability company and governed by the PRC's company law. So some other significant reforms that have come in recently, along with the new foreign investment law, include equal national treatment, the shifting of importance from a company's board to its shareholders, provisions that further protect intellectual property, and provisions that make profit repatriation and currency exchange easier. So I want to highlight these changes because until a few years ago, setting up a company in China was considered a slow, difficult, and costly process. And I think it created the perception among foreign investors that it was too risky and not worth the trouble. But over the course of the last couple of years, the process has become easier, quicker, and cheaper to set up and operate a foreign invested enterprise on the ground in China. So there's a lot more to say on company setup and the surrounding issues. Setting up bank accounts, company chops, as Danny pointed out, registered capital, and so on. And happy to chat about this in the breakout rooms if anyone's interested. But I also wanted to touch briefly on the importance of performing due diligence and background checks. So in my experience, many foreign investors tend to assume China either has lax laws and regulations and so anything goes, or alternatively, that it is overly complicated and rife with bureaucratic red tape. Now, neither of these views are accurate, though depending on the situation, they can sometimes be true. But what I would say is that regardless of whether you intend to set up your own company, enter a joint venture, whether you're seeking investment, looking for an importer or a distributor for your product, or any number of other ways of engaging and doing business in China, the one step that you should never skip over is doing the proper due diligence. So even if you end up doing it yourself, and I'll admit that for some people and some businesses with the right resources, that's entirely possible. Whatever you do, don't skip it. So there are various levels of depth you can go to performing a background check. And again, I'm happy to talk about that more in the breakout room. But at a bare minimum, you should conduct a basic level check on the entity or individual in China, consisting of a public record search using information that's readily available through the Chinese government's statutory reporting and publicity systems. So areas that you really want to check include reporting of finances, company information, registered capital, shareholder information, and you're basically looking for any red flags, legal disputes, fines, insolvency, blacklists, and the like, with the objective of identifying associated risks that might be sitting just below the surface and not visible to foreign investors who usually only have a company profile or a website to go on. Now, as I said, that's the very basics, and you can and you often should go much deeper than that, perform financial due diligence and the like. And again, happy to talk about how that works more in the breakout room later. Finally, all of the above searches are conducted in Chinese and should obviously include a Chinese language media search for the individual, the company, its shareholders, important personnel, looking for anything in the media that could be damaging to the relationship or an association with the brand. Now, I see that we don't really have enough time to talk about compliance, but that's another important issue for operating on the ground in China. In any case, I'll leave it there for now, and I look forward to seeing you in the breakout room.
Great. Thank you very much, Toby. Yes, so we're unfortunately on a bit of a tight time frame. We'll try to still get to the breakout rooms by 12:30. We've got two experts to hear from first, their top tips. I'd like to now introduce Ben Mihailovich, who's the National China Development Manager for International Cargo Express, affectionately known as ICE. Ben, I'll hand the floor over to you.
Thanks very much, Alison, and yeah, pleasure to be here. It's yeah, as mentioned, my role is the National China Development Manager for International Cargo Express, responsible for looking after our business interests and logistics to and from China, and the many challenges that entails. And as you can imagine, over the last 18 months, the challenges have been far and wide with regards to the COVID and all the issues that have been created there. At the moment in the shipping industry, we have a lack of vessels and a lack of vessel space, which is putting a huge amount of pressure on the supply chain. As we all know, the airline industry has been severely hit, and we have many reduced airline capacity in the market, with many airlines still grounded and yet to be back operating. That's putting huge pressure on the air freight market. With all of those challenges, that's obviously created a huge increase in the cost of shipping. Shipping rates for 20-foot and 40-foot containers, pre-COVID were anywhere between $600 and $1,200 a container. At the moment, they're upwards of $4,500, $9,000 a container. So, as you can imagine, that's putting huge pressure on both the importers and exporters over in China as well. However, in saying all of that, we are seeing some record numbers with what we're doing out of China, and it's something that should give us all great hope as to what's happening and what can happen in the next 6 to 12 months in the shipping market. I'm just going to quickly share a screen with you that just provides a little bit more information. And as you can see from this graph, if we look back to October last year, this is the amount of consumer goods that have been purchased from China. We're looking at $27 to $28 billion worth of product in October last year. And as you can see from this graph, we're certainly heading in the right direction. As of July this year, we hit almost $33 billion worth of product being bought from China. So obviously this is, considering all the challenges that we have in the market, this is obviously showing that the market is bouncing back quite strongly. It's obviously heading back in the right direction, and it's something that should give everybody confidence that purchasing products from China is very much back to getting to where we were pre-COVID, and this is something that should give it, as I said, give everyone great confidence in what we're doing. Some of the products that are down at the moment, the clothing and footwear industry, household electrical industries, they are suffering at the moment. Other markets to suffer really are the export market. The export market from Australia to China is something that has been severely hit over the last 12 months. There are tighter restrictions on the import requirements for wine, for Australian food products, for skincare products. And this is something that, again, is putting quite a lot of pressure on the export market, as this was a booming industry pre-COVID. So for us, this is something that we're hoping to see some relief in the next 6 to 12 months, so that we can really get back to this area of trade, because as stated, export products of Australian wine and Australian food products and Australian skincare have a great reputation and a great name in China. And this is something that we hope that we can see an improvement in over the next 6 to 12 months. And so in saying that, some of the challenges that we have had, if you are looking at importing or exporting to and from China, I guess some of the key tips that we have is to make sure that you do align yourself with a freight forwarder that has experience both here in Australia and in China. This is something that is critical to any business, is to have somebody that really understands what is required before the product leaves Australia or before the product arrives in Australia, that the correct documentation is completed. And this is especially so for export business from Australia to China, to make sure that your product arrives in the country in a manner that is acceptable and is what the local Chinese people and the government and the local customs are requiring, and making sure that you have experienced people to guide you through that. I guess some of the things that we're hoping to see, as I said, the rate levels at the moment are extremely high. The feedback that we're receiving is this could possibly still be around for another few months. We are hoping that by the time we get to the Chinese New Year next year, that we start to see, and once we get through that we start to see an easing in this in this part of shipping, that we really start to see the rates get back down to a sustainable level. But in saying that, as I said, the volume of containers that are moving from China to Australia, while they are increasing and the services are down, it is still possible to ship from China. We just need to make sure that we're working with our customers to plan and pre-plan their orders, that we may need to work 2, 3, 4 weeks in advance of what we may have done pre-COVID, to pre-book slots, to pre-book bookings with the shipping lines and with the airlines. And this is something that is critical with working with China at the moment, is really getting that work done ahead of time. But I guess there's a lot more questions that can be asked and answered in the breakout room. So as we're running short on time, I'll leave that with you, Alison, and look forward to meeting you individually in the breakout room shortly.
Great, thank you. Yes, lots of challenges at the moment in shipping. Well, we've got our final expert, who's Victor Jiang, who's a partner and deputy director at Yishe law firm, which is based in Shanghai. Victor is educated at the East China University and also our very own University of Sydney. So, Victor, I will hand the floor over to you. Thank you.
All right. Thanks, Alison. Hi, everyone. I will start with something that you may have heard from your lawyer. Trading with China is not risky if you do have a lawyer working on your legal documents and help you consider what terms are going to be required to provide goods to China or source from China. In recent years, we have been acting for Australian companies and settling disputes with Chinese factories or suppliers. But it's interesting, all these disputes share with the same start point, which is they don't have a contract. I feel like after the two countries signing up the free trade agreements in 2015, the Aussie business is getting used to the socialism with Chinese characteristics. But in my view, we should then try to get a taste of the law and order in China and understand how Chinese play with the rules. So if we're talking about the frustrating wine industry recently, it's definitely a political thing. We all know that, rather than an economical thing. I watched the interview last night on YouTube. An expert in the interview said, when you are doing business with China, remember, the political always outweighs the financial. I think it might be the one of the top tips. But for us, the political thing is not our business. The free trade agreements and RCEP still stay in place, and it's more about how we could build more trades under RCEP framework. As we all know, China is the first party to ratify the RCEP agreements, and Australia is working towards the ratification in late 2021, according to the Department of Foreign Affairs and Trade. RCEP will then replace the 2015 free trade agreements between the two countries. So in this event, I wish to quickly discuss 3 areas of interest in the RCEP framework from a practical perspective, which our clients have been asking about recently. First is customs. Second is the personal information protection. Third is the trademark squatting that Nanny has mentioned about it. But Alison, do you think better to share these in the break rooms?
Yes, I think that would probably be better. The other option is you can do a summary of it in the email that we send round after the event.
Yep.
Yeah, so thank you for that brief introduction, and we'll now leave the remainder of the discussion to the breakout rooms.